Global markets are now flooded with cheaper Chinese electric cars. And their price is kept artificially low by huge state subsidies. This is distorting our market. And as we do not accept this distortion from the inside in our market, we do not accept this from the outside.
Alright guys, so the trend is now a reality. The EU has begun a brutal trade war against China, which will backfire. This is an unwinnable campaign. It might hurt Chinese EV companies, but it will decimate Europe's economy long term. It's vital to remember what drives competitive industrial growth. You need a combination of cheap energy, integrated supply chains, and affordable human capital. China has all three, while Europe has none. And this is how Chinese EVs went from 1% of the market share in Europe to nearly 7% in under 4 years. EV companies in China can make quality cars at a cheaper price, and the market loves them for it. What von der Leyen just did sounds smart, at least on the surface. We will hit China with a ton of tariffs to slow their exports down, and this will give us time to develop our own industries. But she kinda confidently forgot one fact. Beijing can and will retaliate back. This is just round one of the fight. Brussels has started a trade war with China, escalating the tariffs from 10% to 48% on Chinese imports. This is one crazy increase. It more than quadruples the existing tax rate. It won't just raise prices on Chinese cars, EU cars will get more expensive as well. The big losers are EU customers. They are being taxed to prop up EU automakers and fund big government. And where will these taxes collected go to? And here are the new tariffs coming. The original rate is 10%, so the figures here are additional taxes companies have to pay. It's a new penalty for exporting to Europe. BYD has to pay 17.4% more, Geely at 20%, as AIC will be hit with the 38% penalty. But here's the critical part. All other EV producers in China, including Tesla, Renault, and BM, will face an additional 21% tariff. In some cases, this could hit up to 38%. This trade war doesn't just target Chinese brands, it's aimed at the entire manufacturing base of China. If you're Western car companies producing EVs in Beijing, we are going to punish you. That's essentially what von der Leyen said with this press release. And it's not an idle threat. Tesla, a US company, is the biggest victim of this trade war. They make a ton of cars in the Tesla Gigawatt factory in Shanghai. In 2023, Tesla sold over 150,000 EVs to Europe. That's the majority of EV exports from China into the EU. Other brands like Geely and BYD are just the minority, a fraction of this. Western brands including Renault and BM make up half of Europe's EV imports. The underlying message here is crystal clear. If you manufacture in China, we will punish you. Our taxes will crush demand for your cars. And this is a very deadly strategy Europe is using. They want to close off the EU common market to Chinese goods. The idea is to force EV manufacturing away from Beijing. This is the very definition of a trade war. Europe's market for EVs is huge and the margins are good. There's no denying that. Looking at the profit margin for BYD cars, it's very clear that selling to Europe, even with the taxes, will yield a bigger profit. Selling a BYD seal in Germany will fetch 13,000 euros in profit. Conversely, selling in China will yield only 1,300 euros. That's a 10 times difference. With the new tariffs, Europe wants to squeeze the profits of Chinese automakers and force them to sell less. But China is not defenseless. Escalating this trade war will reshuffle global supply chains. With Beijing being the hub for rare earths and renewable resources, Europe could face brutal restrictions. China will also retaliate on the import front as well. And this is something Germany is fully aware of. And that's why Olaf Scholz freaked out when the US started the trade war a month back.
Allerdings möchte ich darauf hinweisen, dass gegenwärtig jedenfalls 50% der Importe von Elektrofahrzeugen aus China von westlichen Marken kommen, die selber dort produzieren und nach Europa importieren. Das ist vielleicht auch ein Unterschied zu anderen Ländern und Nordamerika in dieser Frage, dass das eben so viel Verwicklung gibt und wechselseitigen Austausch. Wir sollten nicht vergessen, europäische Hersteller, auch einige amerikanische, aber europäische Hersteller sind erfolgreich auf dem chinesischen Markt und verkaufen auch sehr viele Fahrzeuge, die in Europa produziert werden, nach China.
När det gäller importtullarna så tror jag vi i grund och botten har stark samsyn att det är en dålig idé att börja söndermontera den globala handeln. I grund och botten är det en dålig idé.
The big losers of this are German and Swedish automakers. If China decides to impose tariffs on European cars coming in, the biggest loser is Olaf Scholz. He's going to get hammered by the auto lobby back in Germany. He's already deeply unpopular in the polls, and this could cause him to lose everything. Volkswagen is in big trouble. They have 14.5% of the total car market in China. That accounts for 30% of their global sales, so the dependence is enormous indeed. The same applies to other German brands like BM and Mercedes-Benz. Beijing accounts for 30% of their bottom lines as well. A trade war threatens to send these companies to Hades, the underworld. This is a classic example of how EU policies are destroying individual countries within the Union itself. Von der Leyen's trade war with China is a blanket punishment, and the biggest loser is Germany. It's not just sales under threat. Chinese money and expertise will leave the country as well. This will regress German automakers even more. S-Volt, for example, has halted plans to build a battery cell plant in eastern Germany. In EVs, batteries makes up around 30 or 40% of the entire cost. S-Volt is a global leader, and with them running away, the German supply chain will be compromised. They have to source batteries from China itself overseas, and that in turn will jack up production costs even further. What the EU just did has many second-order effects, many of which we haven't even mentioned yet. Cheaper batteries is just one factor. De-industrialization in Germany isn't over yet. And if you're a Chinese company like BYD, does this make you more or less likely to invest in Europe? It might be import tariffs today, but they could come after your factories tomorrow. If we look at BYD's EV factories all over the world, the only facility in Europe will be in Hungary coming soon. And that's because China-Hungarian relations are strong and beneficial. The other factories are in Thailand and Brazil. The upcoming plans also include Mexico and Indonesia, and this is where the capital, the technology, and the expertise will flow to. Germany will have the worst of both worlds. They will need to import more expensive raw materials, endure higher energy costs, and sell to the EU market, which is in decline. In contrast, China's economy is growing, and this means more consumer demand will come online in the years to come. Even the IMF is bullish on China.
So we've upgraded China's growth by 0.4 percentage points for this year and for next. So we have growth now projected at 5% for this year and 4.6% for next year. There are two main drivers for that. The first is the better than expected first quarter GDP numbers that came out for 2024. That is lifting up our growth projection. So China's economy is continuing to recover. So we certainly are seeing that consumption is recovering, but still it has some ways to go. The strength we're seeing in public investment remains. Private investment is still weak, mainly because of the weakness in the property sector. So we are seeing signs of recovery, but yes, there is still more that we need to see more evidence of that. But I think despite that, we do expect that growth will be around 5%.
Europe cutting away China means Beijing needs to find alternative markets, which isn't difficult. The EU is not the only game in town anymore. Brazil, for example, buys over 2 million cars a year, and this is a market very receptive to China. There are no restrictions. In the first 4 months of the year, Chinese brands Great Wall Motor and BYD accounted for 86% of the EV market. They have an effective duopoly there. If you have a growing consumer base, the next step is to build even more factories there to satisfy demand. Unless the West decides to sanction Brazil, EVs made there can be exported to Europe as well. We are beginning to see China helping the global south and BRICS industrialize. They are leaving Europe and investing in friendly countries. Global supply chains are starting to decouple, and the EU trade war just made it worse. Another big market for Beijing is Russia, and this is something very few people realize. It's not just about oil and gas and commodity trade that's booming. Chinese companies are selling cars like hotcakes to the Russians. Russia is the biggest buyer of Chinese cars. In the first 5 months of last year, they bought nearly 300,000 Chinese cars. Mexico is in second place and it's not even close. The majority of cars sold are fossil fuel engines, but the potential for EVs is enormous. China is going to help industrialize Russia even further. As the charging network continues to grow, Chinese EV brands will find a new willing market to sell into. And when that day comes, the biggest casualties will be cars from Japan, another G7 country. In just 1 year, Chinese brands like Chery and Geely have easily doubled their market share in Russia. And where is this change coming from? It's being stolen away from Korean and Japanese brands. Hyundai, Kia, and Toyota all saw their sales in Russia plummet. In certain cases, they've fallen by more than 70%. And in the years to come, this plunge will only get worse. The trade tariffs from Europe might hurt China in the next 6 or even next 12 months, but beyond that, the EU will be hurting more, and here's why. China brings in over $800 billion a year in trade surplus, and that allows Beijing to invest overseas to build up demand in many countries. Russia and Hungary, they are just two examples. When this demand is built, you can be sure they will only buy Chinese EVs. Do you think transactions will be made in dollars, euros, or local currencies? The answer should be ultra obvious. This escalation by Europe is going to backfire in so many ways. China can impose tariffs as well, or maybe they just decide to restrict critical exports to EU. EU giant Airbus is also hoping to sell 100 planes to Chinese airlines. Do you think this will go through now? We are in a trade war and the deal might very well collapse. China isn't going to back down from this, guys. They have vowed retaliation of their own choosing. No matter the outcome, this doesn't look good for Europe's economy. The decoupling between the West and China is only going to get worse, and ironically, this is driving Beijing and Putin even closer together, the biggest nightmare of America. This isn't a victory for the EU or the West, but let me know what you think. Will China hit back hard, and has the EU started a war they simply can't win? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.